The situation continues to unfold around the world, and the first thing I need to break down is the energy crisis. I know you've been talking about it. I know you've been seeing it and feeling it as well. I've got new information around that. The second thing I want to look at is the margin calls. This is directly correlated to the energy crisis, and I'm not sure why this isn't front page news and front and center on everybody's radar. I'll bring that to you. And the third thing is the huge shifts. There's some big developments happening today, and I will give you information right now today that you must know. If you stay until the end, you are going to get one tip related to the food that you're eating and what you need to do. We need to preserve what we have. We need to be able to conserve and take additional measures more than ever before. Let's go. I'm sure you're already aware, but the price of oil has been rising, and right now oil's at a 7-year high after OPEC Plus decides on cautious increase. So the price right now, if I have it here, I think it's like $77 or $78 right there, $78 a barrel on the WTI. Okay, Brent is at 82. There's been calls for Brent at 90, and it's every day it seems to be looking more and more likely to actually happen in the coming months. In fact, if it goes at this pace, it would only take potentially days or weeks. Commodities index hits a record as world rebound meets shortages. There's a lot of issues today. It's not just one factor, of course, but I just wanted to show you this. It actually surpassed its peak from 2011. You remember what happened here. The commodities were going straight up. And then for a long period, at least it seemed like a long period of time, when the commodities were not in favor. Okay, they were really looking quite depressed in comparison to real estate or maybe equities and so on. But right now, take a look. You could see from 2011, then the prices started falling, and they bottomed out around the beginning of 2016. And then there's an up and down kind of motion here until we get to early 2020, and it just skyrocketed from this point on, and it looks like it will never stop. This means higher prices for you. But what about later down the road? How do you think that's going to look? Well, Dubai port operator DP World sees lasting supply disruptions. In fact, saying that supply chain blockages may ease in 2023. So not next year, 2022, another additional year beyond that, saying that freight rates are likely to keep increasing. And this is huge. This is so important, of course, because this affects everything you buy. And it's going in so many different levels from all different directions. And I don't understand how this could have happened to this degree when we should have been prepared for this. Individuals should be prepared on their own. Businesses should be prepared. But they've got this just-in-time formula, which is basically saying, why am I going to pay for warehousing of my inventory when I can simply order when I need it? I can roughly gauge how long this will take, and so I ultimately will save money. But companies did this to such a degree that right now we're realizing very rapidly why that is a bad move long term. One of the biggest global port operators expecting supply chain bottlenecks that have rattled the global trade flows to continue for at least another 2 years. The global supply chain was in crisis at the beginning of 2020. Maybe in 2023, we'll see an easing. It's just incredible to see this and hearing it from every single company. Maersk is talking about this. I mean, all the different shipping companies, whether that is coming in the form of sea shipping or, look at UPS, FedEx, DHL. They're all increasing their prices right now. All across the board, everything has gone up. And you see how often, historically, when something goes up, does it come back down in terms of price, the price that you pay at the store? Oh, sure, your real estate, your stocks, your bonds, whatever it might be, those asset prices can come up and down. But you as a consumer, it isn't very often that you see prices actually declining? Let's look more into this topic, okay? Power crunch looms in India as coal stocks reach a crisis point. More than half of the country's power plants have less than 3 days of supplies remaining. If you know what's going on personally, if you have details about this, not necessarily with India, but wherever you are, post it in the comment section. We need to understand what's happening here because I'm getting this from the Financial Times. I'm getting information from Bloomberg, but we need to discuss between each other. We need to exchange this information from the grassroots. If you think the grassroots is truly important, hit that thumbs up. Support the grassroots movement, okay? On whatever level you can. Support your local stores, local businesses, and make sure that they understand where you're coming from. Okay, all of that, all right? Don't forget to hit that like. Look at this. You're seeing the difference between natural gas as it is priced in the US, the green line, which has come up considerably at around 6 in comparison to the Netherlands TTF natural gas showing you 33.7. Look at the delta, the spread in between those two. As far as I'm aware, this is the biggest ever. And that doesn't end well. For the people in the Netherlands, I've heard from you. You have talked about the prices that have gone crazy right now. And I can only imagine where this is going to go. Let's break it down a little bit here in the Money GPS Insights. We've got low inventory, high demand, low supply in some cases, and outages, all of these combining at one single time, creating a major crisis. Inflation looks like it will remain, and that will destroy savers. Be very careful. Hedge against inflation as best you can. As an investor, there are ways to do this. As an individual, there are ways to do this. We'll talk about that a little bit at the end of this video. There is a common thought that if you buy quote unquote good companies, you are always going to see their stock rise. But even the best of companies, the biggest of companies, their stock might not necessarily correlate with what's happening in the actual company itself. And this happens to be Amazon. Amazon turns negative for 2021 as higher yields add to pressure. The tech stocks right now are not doing well in general. And, I could show you just another example. I had Apple pulled up right here. It peaked out somewhere around, let's say 155, now down to 139. It is off around 12% or so from its peak just recently. I'm looking at the technicals. This is the weekly chart. You can see right here the daily chart. In all of these circumstances, this is the 4-hour, this is 148 minutes, and so on. All of these are looking bearish right now at this time, just in general. You look at the QQQ, you look at the NASDAQ, and you could see that as well. It isn't a good sign when all of these things are pointing in one direction for the short term. We know what can happen as easy monetary policy makes its way into the system and how that works, but I'm just showing you in the more short to medium term what's happening here, and tech stocks are not faring very well. Okay, that is very clear. I know you know that, but I'm just trying to show you that not everything is always going to happen. There are always going to be variances. You could say, will Amazon stock be higher in 10 years from now? If it survives, that might absolutely be the case because the company brings in so much money and they've got their hand in everything. But it doesn't mean that when you need that money, if you needed the money today, you might not want to sell off that stock if you had bought it 6 months ago and so on. So you have to be careful of where your money is going into, okay? Look at these particular examples. Amazon stock in the negative, Apple not faring as well either compared to a company like, for example, Alphabet, which has done very well. This is just since the beginning of the year, and a lot of these stocks had come up considerably. They're off their highs. We have seen these cycles take place before. It's not the first time, but I'm just saying be very careful, because if you go into a trade, into a trend, and you're seeing that move, well, that could always change. So you've got to be aware of not just the fundamentals, but the technicals as well. And what I call the paratrooper trading strategy, different story. Anyway, commodity traders face big margin calls as gas prices soar. This is big news, okay? Reuters brought this up, but I don't see people talking about it in general. It should be right front and center. The world's top commodity trading houses are being told by brokers and exchanges to deposit hundreds of millions of dollars in extra funds to cover their exposure to soaring gas prices. 7 sources with direct knowledge of the matter told Reuters. 7 sources, okay? So that's a little bit more reliable than sources familiar with the matter. This just shows you that even when the prices are rising, that isn't always good for everybody, okay? So investors could lose out in this case here. It just depends what side of the trade they're on, what businesses they're involved with, what stocks and so on. While there have been margin calls associated with the European natural gas price rally, Gunvor maintains a healthy liquidity position and instruments to manage any further volatility. You've heard this type of talk many times before, that these companies have no fear. They'll be okay. Looking at this right here, liquidity squeeze. This is what it's all about. Okay, this breaks it down. To hedge against price differences between the physical gas in the US now and the rest of the world in the future, traders need to sell short positions in the European and Asian gas futures market. A short position is created when a trader sells a gas futures contract with the intention of repurchasing it later, hopefully at a lower price. The strategy caused a liquidity squeeze last month when European gas prices soared due to a variety of factors, including low inventories, high demand for gas in Asia, low Russian and LNG, liquid natural gas supply to Europe, and outages in Europe. The main platform for building a short futures, guess what? Dutch TTF gas market hub. This is what we're seeing today and why we are seeing it. Okay, so just a little bit of a breakdown. If you want to see the whole thing, any of these articles, as always, links in the description. In Italy, if you are in Italy, let me know what you're seeing. Check this out. Government intervention by the way, this is a translated article. Government intervention reduces the impact of increases approximately 30% for electricity and 14% for gas. Zero impact on families in difficulty. So they're saying that they stepped in, prevented the price hikes, saving people a lot of money. This is huge because the prices have gone up. As you see, government stepping in looks like a bailout of sorts, and I'm interested to see where this goes. They need to keep everybody calm, I guess, at this time, because this could really, really hurt a lot of people. It's on every single level. Think about this right now, not just natural gas, not just, any of these types of things that people need to heat their homes or businesses need it for whatever reason. It's in all levels. Silicon's 300% surge throws another price shock at the world. Silicon metal output disrupted amid electricity curbs in China. And, they go into more detail, but think about how many levels of it. I mean, it's just crazy. Texas company offers truckers $14,000. This is true, apparently, $14,000 a week during tough times for the trucking industry. The CEO of this company, which I believe it says it right here, SISU Energy, they're paying experienced drivers. Sounds too good to be true, but apparently it's a real deal. That's $650,000 a year, okay? And then this, I got 2 more things, okay? Nord Stream 2 operator starts gas filling of the first string. This potentially could bring more energy to Europe. We'll see what happens. They need this right now. Clearly, the supply is an issue, okay? We'll see what happens. There's a geopolitical tension. There's all kinds of things that are happening today. But if this actually goes through, brings them the gas that they need, could be positive, definitely. Fed prepares to launch review of possible central bank digital currency. That's right. They're not willing to go through with it yet, but they want to talk about it at this time. This is just showing you from Goldman Sachs, I believe, showing you many countries have active CBDC pilot projects and a couple have launched CBDCs for public use. All right. You're seeing this right now. Sweden, China, they're in their pilot projects, launched Bahamas and Cambodia. And then, you can see the rest. What I'm showing you here is that the world is changing. We are moving into an arena where central banks have more control than ever before. And I just believe wholeheartedly that we should be ready for anything, any changes. Okay, the tip right away. For your food supply, for the food that you eat, you've got to preserve. Preserve what you have. It's essential, and it comes in various forms. Canned, jarred food can last an extremely long time. You can eat your supply. That's the thing. It's not as if you're buying freeze-dried food, which, as I say here, can last 25 years. That's excellent, but cans of things, you can always just eat that. Buy in bulk, preserve, save. That could be pickling, dehydrating, fermenting, freezing, vacuum seal, whatever it takes, different applications for different things. Do what you can today to make those changes right now, implement them, because quite frankly, it's an old school way to look at things, and they made it through some tough times. We haven't had tough times in our lifetime, but it looks like we could be entering that right now. All right. If you want to join the insiders, it's totally free. It's my way to get to you. It is right here up at this card. Click that. I'll send you the emails 5 days a week. I'll send you the video of the day. We can get around the censorship and that right here or at themoneygps.com. Support the channel. It's pretty easy. Just click that thumbs up button. Click it. I do appreciate that. And if you haven't seen this video yet, you definitely want to check it out. Click it, and I'll see you there.